Greetings, Dr. Jeffrey Scott here. This is my weekend market update for the weekend that includes Sunday, February 18th, 2024. Sometimes like today, I'll get it done on Saturday, so hopefully this will be posted before I go to bed tonight, and you'll get it either late on the 17th or early tomorrow. It takes a while sometimes for these to get rendered by YouTube. I title this Tops Are a Process. If you've been trading long enough, you know that tops are complicated. They don't usually occur with a single bar. On the other hand, it is amazing. Sometimes you can get a single bar reversal of a bottom. We're going to look at that in this session. I toyed around with other names, and one of them was, it really wasn't as bad as it looked, as describing the week. Again, my email address is htsidoc@gmail.com. If you're new to my channel, please hit subscribe, hit the alarm, and you'll get notice when I post these. If you like this, hit the up thumb. If you want to email me with questions, comments, or put them in the remarks section of eBay, please keep them constructive. Even if you don't like something, you can say it constructively. I do listen to what I see, and I take into account when I do these videos. The other thing is I'll be looking forward to Wednesday through Friday. I'll be in Vegas at the Money Show Traders Expo meeting. If you're there, look me up, email me. I've got my phone with me all the time. I'll happy to catch up, maybe share a bottle of wine or a few beers with somebody. As always, these are for educational purposes only. I am a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any decisions you make. This is education and not recommendations to buy or sell. If you like these videos but you want them shorter, just go to stocksanddocs.com, put your name and email there. I don't keep a list. I won't bother you, I promise. I got a small mailing list of people that have requested to be on it. But I don't get this list anyways, and I typically will put out either the night before or early in the morning a 5 to 10 minute video of what I think is going on and what I'm watching. Major markets tell a story. In yellow are the major markets. You'll notice that on Friday all of them were red. On the week, the broadest of them, the NASDAQ and the NYSE, were both up, and the NYSE and the Russell were both up. The NASDAQ Composite were down 1.5. The Dow was down just a teeny on the week, and the spiders were down 0.3. So for all the volatility we saw to the upside and downside, and Friday was to the downside, it really wasn't a bad week. Big winner was Bitcoin on the week, up 8.9%, and then look at the Russell, up 1.2. Natural gas, as I often refer to as dead to me, is 62% off of its 52-week high and was down another 12.6%. You could see on the S&P 500 industry groups, energy and materials were strong on the 5 days, and really things that have been weak for quite some time. If we look at the Q Edge tool, you could see, if you look from a breadth perspective, and this sort of surprised me because it doesn't really match up with the indices, 91% of the sectors were down on Friday, 78% of the industry groups, and 73% of the stocks. The only sector up was energy. If we look to the left, 60-40, kind of a midline, half and half stocks in the S&P 1500, a few more above the midline, and that's a very neutral signal. Very few stocks above or below. Again, very neutral on this analysis using the Q Edge tools. Here is the Q Edge market breadth, and I like to watch this. I heed Hindies, and we have confirmed Hindies, which are the purple ones. The initial non-confirmed one is yellow until it confirms. The light blue line is a Bango, which is a sign of irrational exuberance at a high, and when I see Hindies and Bangos, I get concerned. Now, this is a composite combining the NASDAQ and the NYSE. If you break them out, you see the same thing. Bangos at highs with confirmed Hindenburg Omens. I don't ever think a market is good when I see Hindenburg Omens. I never go all in margin, personally, when I see Hindenburg Omens. Watch my video from last week. It's on YouTube if you're not familiar with the Hindenburg Omens. I have more comments and emails about thanking people for reminding of that than I do for the last 10 videos combined. This is Nick Drendel's tool, and the key point about this is that The indices closed in the lower part of their daily range, just tells you that the market didn't rally into the close. And on the week, the winner was crypto. The weekly timing model, and we're going to go more into detail when I get into wealth charts itself. It shows you the strength in the market is still there. We got weekly bongos on all four of these. This is spiders, Qs, diamonds, and Russell. Weekly bongos are green, and we are above the white line. We're going to look at this again in a few minutes. Let's look inside. Rates rose on strong CPI and PPI. This is a 10-year. This is the 30-year. You can see the markets pull back a tad. Recession in our near future, I say no. Why do I say no? Well, things that might argue against a recession is you get these gray bars when the 10-2, 10-3 yield curve inverts, means the difference is below this line. Notice the gray bars, which represent recessions, occur when we correct. We're getting close to correcting on the 10-2, not so much on the 10-3. So that would argue that we could have a recession coming. How are we going to correct? Fed's going to have to massively cut lower rates. When would that happen? If they thought we were going into a recession. Or the market's going to start pricing up the long-term rates. When would that happen? If the economy is too strong. So we'll be watching that. You won't get a recession if the economy is too strong. If we look, unless the Fed tries to do that to shut it down. If you look at the Bank of America index option spread, measure of tightness, you don't see any tightness here, which goes against any time of recession. And then lastly, a measure of economic activity. This is the Philadelphia Fed Diffusion Index. And when it drops below -20, we get recessions. The gray bars are recessions going back to the 70s. Notice we are above the zero line. That's not where recession starts. So we'd have to see some slowdown in the economy, obviously, before we'll start thinking about a recession. Breadth was mixed. Stocks above the 200, stocks above the 40, both minimally improved, while the 21, 21, 13-week new high, new low ratio actually eased. So I just said breadth was mixed as we eased off of our highs of the markets. AD lines, it's an interesting story. These are 5 of them. T2100 is the NYSE AD line. It's in blue, and yellow is the it's in yellow as the AD line, blue is the NYSE. Not much divergence there. NASDAQ 100 is in blue. It's AD line in yellow, not much divergence. Same with the Russell 1000. Here's the big divergence. The NASDAQ advanced decline, or the NASDAQ composite, and the advanced decline are getting lower lows. So we'll have to see if that reverts. Not as much here on the Russell. I mentioned the buckets a few minutes ago. 60% of the stocks are above the S&P 1500. No pattern here, neutral. I've already mentioned the Hindenburg Omens. I run it on multiple platforms to verify the signals. This is on EdgeRater, looking at just the NYSE common. Sometimes if you look at the broader NYSE, you do not get the signal, but they have a lot of, not junk, but a lot of bond funds and other things that may not be appropriate for a Hindenburg Omen signal. We've got confirmed signals. What we don't have here, which is could make some optimism, is not a lot of new lows. If I look at the market week, remember I said it wasn't as bad as it looked? This is on the left is taking all the stocks, $2 and 250,000 shares, looking at their ERG, which is a composite of earnings, relative strength, and group, and looking at how performance was based upon the ERG. You take out the head and the tail because the number of stocks is very small, and you got a pretty flat line above zero. So for the most part, modest moves in the market, but to the upside. Over here are a large number of groups that I either follow. Somewhere in there will be things like my filtered buy watch, which are usually my favorite buy stocks of the week. My overall buy watch from the prior week also was up a little bit. Somewhere in here are my own holdings. I had a crappy week except for one stock. You could see I had 7 wins, 6 losses. I was up 1.8, but it was driven by APP, which had blowout earnings. Be careful of climax runs. On my stocks and docs, every day I talk about SMCI. You have to have, I was going to say balls of steel, but I wouldn't want to offend anybody. So you have to have nerves of steel to hold this stock. And SMCI had a massive run, got upgraded with a price target of 1,060, and it tanked 200 points on Friday. Is that the end of SMCI? I don't know. It is a dangerous stock to be playing. Qualcomm on the right. For those that were not trading in the year 2000, CNBC would start every show with deep baritone, Qualcomm, Qualcomm. This was the darling in the market, up every day. Now, keep in mind there's been multiple splits. So what may look like a move of 100 points could have been a move of 500 points or more. Qualcomm ran up, similar climax run, sorry about that. And then what happened? It dropped from over 100, ultimately dropped down to 30. So be careful. Climax runs don't end well. Here's my favorite part of SMCI. And it shows you that analysts are people too. An analyst at a smaller firm in December put a sellout on SMCI with a target of 160 and then proceeded to run to 1060. Bank of America at the end of the week put out a buy and a 1060 target. That was the peak. Interesting. Know your news and earnings. Another title for this week might be Beware Talking Fed Heads. Are they going to come out and say great things like, hey, we think that you got too worried about the CPI and PPI and we still think we're cutting? I doubt it. They're more likely to say, need more data, higher for longer. That could cause some volatility. We're going to get the FOMC meeting notes on Wednesday at 2 o'clock, and we've got some other data. On the right, we have a lot of earnings. I see some energy and other names, but boy, look what's right in the center with those two red arrows. NVIDIA. Imagine what happens to the market if the NVIDIA does an SMCI. I'm not projecting it. I'm not expecting it. I own some of it. I'm probably holding it. But NVIDIA could take down the market in AI if it comes out with anything negative. I doubt they will, but SMCI had great earnings, and look what happened to them 2 weeks later. Things get extended. They have a tendency to correct. And by the way, if you look at something like SMCI and its climax run, and you start saying the most dangerous words in trading, it's different this time. 4 words. You're in trouble. It never is different this time. Just giving you from painful experience. Thoughts, markets ended the week mixed on a roller coaster week. Hot CPI, PPI, less unemployment, so hot, strong employment, retail sales lower, rates higher. We're just off all-time highs, so it's hard to get negative here and say short, short, short. I'm not saying that. As I said, tops are a process. We're in the midst of earnings season with another heavy week again. NVIDIA, I think, is priced for perfection. Any disappointments likely weigh across the technology and AR participants. Beware of blow-off tops. And for me, I'm still long, no margin, less positions, and more cash. Very limited short exposure. J-Dust didn't work for me. And I'm cautious, but I'm not going to get overly bearish until I get more turn in the market. And I have a little shopping list for shorts that will hopefully be a warning signal. I think we're in the process of forming a top. They take time, or can take time. And again, we'd love to see you at my Stocks and Docs site for my daily reports. Now, let's end this. Let's go into the program. So I wanted to look a little differently this week at the weekly timing model. And let's just look here at the spiders. The way this model works is simple. As long as your price, let me give you a little bit more here. As long as your price stays above that white line, you would only be out of the market when both the price closes below, and I don't think it happened here, and you've got a red bongo. Okay? Price closes below, and you had a red bongo. So you may have had a week here, you would have been stopped out or starting to get out. When you get into big roofs, you can stay long a long time. Here was a high in the market. Now let me bring this back to here. This was the 2020 peak, the run up. This was a complex cup and handle and a breakout. Would that be amazing? It kind of looks like one. I hate to say that, but we will see. Bottom line is we are at all-time highs on the spider. We are at all-time highs on the Q. If you look at the NASDAQ composite, buried in this middle section here is a very high day. That yellow dot dash represents the prior high. And I talk about the Hindenburg Omen a lot. If you are a believer in the Hindenburg Omen and you were looking at the NASDAQ here and seeing this many weekly Hindenburg Omens fire, these are actually the number of daily ones that fired during the week, you might have been like me and thought about getting out of the market. And notice how the market reversed here in December 2022. I'm not sure anybody believed it until here, which was March, and really believed it in here in November. So this was actually an incredible year for the NASDAQ in 2023. The Russell, different than the others. The Russell had a Darvas box for the entire 21. Failed breakout and the market traded lower. I think we've been in a Darvas box over the last year. Are we breaking out? That would be very bullish if we could hold it. Diamonds are right at about all-time highs. If we go and we look at the indices and we just pull up the 5-minute to take a look at the week that was, let's just make it bigger. This white line is where we closed the prior Friday. Monday we traded higher. At the end of the day, the market probably was spooked thinking about the CPI closed right below the prior close. Tuesday, big gap on the CPI, but notice what happened at about 3:30. The market traded higher into the close. Wednesday, we gapped up, a little pullback, and closed almost to where we opened, or closed the first, the low of on the Monday before the little bit of a rally here. Wednesday, we traded up into Thursday until the CPI came out, or the PPI, and we dumped. Friday, we rallied, and then late in the day, and I don't know why, don't have a good reason for it. Let me just fix this. But on Friday, we ended up selling off into the close. Here's where the week closed before, so we had a negative week. So if we look at the indices, Spider Daily, we know was down a little bit, 0.5. Looks like it's in a consolidating area here. It kind of looks like a triangle, whatever that means. Same thing here, you can make a triangle. Here is the Qs. Down 0.91 on Friday. The diamonds, an inside bar down 0.53, an inside bar on the IWM down the most 1.36. Here is UVXY down 0.54, and the dollar was actually up 0.04%, but trading in a sideways move. If I go and I look at commodities, and let me, gold and silver had up days with a weak dollar. Oil is trying to move higher. Something to watch if we start seeing pressure because of what's going on in the shipping on energy and other items. We could see inflation come in and oil prices go higher. That would be bad for the markets. And the 10-year has come up to a level here that was resistance in the past. We had a big break above it. Will this area turn into resistance again? Sure would be nice, wouldn't it? If we look at the sectors hourly, we're looking for things that are pointing up here. Well, this is not a sector, it's the S&P, and it shows you how strong it's been. All the other charts are the S&P sectors in ratio charts. So things that are pointing up at the right-hand corner have strength. Financials, industrials, energy starting off, maybe even materials. And how about biotech? Things that have long blue bars showed strength on Friday. Materials, energy, financials not too bad. Things that are going the opposite way are weakening. Technology. Things that aren't doing much. Staples, real estate, and utilities. So if I had to say the winners here, probably the materials and energy short term, and then financials and industrials are starting to come around as well. So I go into my stock scanners, and I could start with the heat map. Here's the S&P. Does that look like a market that's down 0.5%? Looks a lot worse to me, but that's what it was. So, some of the red could be after hours trading, but on the weekend, that's not much what you see. But there's your S&P 500, the heat map. Next thing I wanted to look at was the wealth scanner, and just to show you that there's been some rotation in the market. and rotation to the upside. So this is a list of market, sector, industry group, theme ETFs. And I look to see which ones are up at the top, which ones have high scores. Last time I looked 2 days ago, there was on Thursday, nothing was at 800, so one at 800, so three at 800 is better. There's more in the 700s, and we're broadening out. There's rotation here. Momentum up at the top, although it didn't have a great session on Friday. Fidelity Magellan, I think boring, large cap safe. Um, Quality factor ETF, I think this has got to do with interest rates and bonds. I don't know. And then here's infrastructure, transport, pharmaceuticals, esports, oil, financials, pharma, minimal volatility, health sector. So as you can see, we've got a pretty broad-based section, but not your traditional technology plays, not semiconductors, not software. So there's been a rotation in the market, not FANGs and not 50, which we were seeing. Now I could go right to CAT scanner, and for example, since one of the ones that I like up at the top was XPH, I could go into my CAT scanner. I could pull up my drugs and pharma. I can see if anybody's got a good score, and there's a couple here I want to show you. One is Sarepta. This has been a really strong company with some fleas, to be honest, but they've got drugs in the market, a lot of inherited muscular dystrophy type diseases. They had some good news on Friday, even though they have a red candle, they were up 7%. That could help pull up biotech. CLDX is a biotech stock. I like the pattern. I don't know enough about what they do, but this is a technical discussion. Notice that we just turned from red to green on the daily. I think, but pullback, a break above the 50. Relative strength and OBV are strong, not extended. It's a pattern I like. Rare Ultragenics, same pattern. Uptrend, pullback, breakout. Volume, breakout momentum from a squeeze, not extended. Relative strength and OBV look good. XNCR is a beaten down one that had a pretty massive move, but if you look at it, it's had a few days of a nice move. Took out the 200. I have to look. I can't just rely on a number. By math, because the stock has been sideways for quite some time, it's going to come out extended. It's not extended. The bar is still on the 200. Good volume coming out of a squeeze, relative strength and OBV. So there's a lot of things to like here. APLS I talked about last week multiple times. Nice uptrend. Looks like this might be setting up. And here's an old name that I thought looked really good, and that's Merck. And I'm an oncologist, which is a cancer doctor, and Merck is the number one in my mind. Them, maybe an AstraZeneca, and maybe Daiichi Sankyo are three of the big leaders right now from a larger cap names in cancer care. They are the owners of Keytruda, which is one of the great immuno-oncology drugs. So one way is to look at those themes, go into that industry group and see if anything looks good. Another way might be to go into Sector Scanner. And what I've done here, and I don't want to repeat it all, is I started by just looking at algo scores and took the top 3 algo scores or top 4 in algo scores on daily. When I saw if there were any weekly thing that I should pick up, okay. And is there any monthly I should pick up? Basic material. So I took that half of the sectors. I hit compare. Now I've got a large list of industry groups. I ranked them by daily algo. And I said, let's go from that one down to, say, 300. Let's hit my shift key, hit the box, they all fill in. Now I'm going to rank by weekly algo. I'm going to click the first empty one, and I'm going to go down to, say, 350 again. Click them. And then I'm going to look at monthly algo, and I'm going to go down and say 350 again. Click them. So all of these are clicked in. These are the ones that made it on daily, weekly, or monthly. I am now going to bring out the stocks in these industry groups. So I've gone from sector to industry group to stock. And now I'm going to rank stocks. I'm going to take all the stocks with a daily algo down to 750. So I got to go down far. There's a lot of them. Now I'm going to look at weekly algo. Let's take them down to just the 800s on the weekly, filling in the holes. And let's do the same thing on the monthly. Down, capture all the 800s. So put one here. Then go down here to the 800 bottom. Hit my shift. All right. So now I've created a watch list which is called top down February 17th. That's my default. I'm going to add to watch list. So now I've created a list, a very small, skinny list of the top performing stocks in the top industry groups in the top sectors. And I can go into my CAT scanner and I can pull up that group and see if we have anything show up. And I'm looking for pullbacks and uptrends because in a market that's run too far, I want stocks that have already pulled back some and are not extended. So let's find that. There's top down February 17. Number one that comes up is TOST. Here is a stock that I think on earnings had a breakout. Do your own research, but big volume 2 days in a row. Gap, volume, breakout, and momentum. Relative strength OBV not extended. So TOST is on my buy watch list. Looking down this list, a couple other things that I liked. Comment about McKesson. If the economy turns down or this market has weakness and you've got to be long because you got FOMO, look at drug distributors, McKesson, Cardinal, and Cencora. I've sold businesses into 2 of them. I've worked for 2 of them. These are the best, in my opinion, operating companies in the world. Why? Because they sell hundreds and hundreds of billions of goods at a margin of less than 1%, let's say at that on each sale, and they make money year over year because they're so powerful as an operating company. They do such a great job. They do very well in tough economies. Other things that I liked in here, applied materials. I don't like the candle reversal here. I don't know if it was an earnings day, but one thing about it, this one is extended. You've got the fan of the moving averages and you're high on the high jump. INFA, Informatica, this is what I expect applied material to do. And so many of these stocks will do, and it's not bad. Not bad at all. But after a run up like this, they might just drift. I didn't do that right. Let's try this again. Drawing tools, freehand, freehand. And they might drift down before they go higher. Problem is you don't know how long that's going to happen. So I typically will not buy this gap up, especially when it closes in the bottom of its channel and it's extended. All right. Another thing that I like to do is I create a watch list that I actually post for you, and I call it my combo leaders list. And in that combo leaders list, I've combined stocks from a lot of different groups. Just to give you a sense of what's in that combo leaders list is I have a lot of scans in TradeStation, scans in other programs. I've got things from websites, and I create a bunch of lists. I combine all the bullish stocks in a bullish group and the bearish stocks in a bearish group. And if we look at the combo leaders, here's Sarepta, here's another healthcare stock, Shockwave. You have to go and look at it. I'm not advocating it because it's been kind of loosey-goosey. But they've got an interesting technology, kind of lithotripsy for heart disease. And I like the company. Love them fundamentally. Looks really good here. Nice uptrend, and then they break out on Friday. Good volume in a tough market day, not extended. Relative strength OBV look good. We already looked at Toast. Celdex we looked at. Another one I liked. It's got to clear this 200 on the daily, but Dollar General's in a very nice uptrend after a gap up back here, and it had a huge move on Friday. Here's your sideways move, which gave us the pullback. It says it's extended. You look at that. I don't consider that extended. Again, flat, and it's in between the 50 and 200s. I ignore the extension. I like the relative strength on OBV. It's got an EMS signal. I think that one might be giving us a signal. you're looking for a dividend, I think Hercules Capital's got a good dividend. Notice uptrend, pullback, breakout. That's my pattern with a gap in volume, a breakout signal coming out of a squeeze, not extended, relative strength and OBV look good. So many nice looking patterns, but it's not a market, in my opinion, to be all in. Here's another small biotech that's having a big move. This is one that on the left looks better than it does on the right, but this is a stock that's had a pretty massive sell-off, but something's changed. It's actually broken above and held the 200, so it's on a watch list for me to see what it does. So I've looked at my approach to top-down analysis. I showed you my scanner. I told you I'm not ready to go shorting, but I do think we're going to have an opportunity soon. So I always create a basket of potential stocks to short. And then I have a scan that I'm just going to look at very quickly, which is called retracements in downtrends. And I look at the most dots, I'll get as 3. And there are stocks out there that might be giving us opportunities. And I'd rather wait for this to retrace, just like the uptrend pullback and break out. Dropbox got clobbered, probably too far in one session. Digital reality. So there are stocks there that I'm building a watch list. Fomento Mexico, LabCorp. So the same signals that work to the upside, if I just flip this over, would look just like a pullback in an uptrend. So there you have a pretty rapid a little bit over 30 minutes review. Let me know what you think. Let me know what you think about the market. Do you think we're in a topping? Do you think we go up to infinity and beyond? Anything I can do better, let me know. And if you are in Vegas, look me up. Have an awesome, awesome Monday holiday. No markets. Yay! See you on the other side.